What's up, guys, and welcome to the Fit to Flourish podcast. Today, we're going to talk all about volatility. So, volatility basically tells us how much the markets will move and also how much a stock will move. And that's on a day to day basis, day in and day out. So, the first thing that I wanted to bring up was the VIX. So, let me share that on the screen now. So, the VIX is basically the volatility index, and it represents how volatile the market is expected to be. So if you type in VIX on a charting platform, it will actually pull up this chart of the VIX, the volatility index. And it's derived from what prices options are trading at on the S&P index. And it really helps day traders and investors recognize market conditions. So this is something very useful for looking at the picture and how volatile the overall market is. Now, the next thing that you'll probably want to know about is what volatility is itself. And again, it describes the risk of a security, how much it moves up and down. So beta is actually a measure of volatility that describes the systematic risk of a specific security. So if you put money in to invest, it's telling you how much it will go up or down over a period of time. And beta compares other security movements compared to the S&P 500 movement. So stocks with a beta above 1 tend to move with more momentum than the S&P 500 index, which is ETF, exchange traded fund. So it's a basket of stocks, the 500 largest stocks in the stock market. And stocks with a beta less than 1 usually move with less momentum. Okay. Now, volatility in beta. So some stocks have a negative beta. So that just means that they're inversely related to the market. So they do the opposite. Beta doesn't predict price. However, a beta of 1.5 would mean that a stock is moving up or down 1.5 times more than the S&P 500. And I wanted to actually make this a little bit bigger so you can see this, but the beta of some of the stocks from 2022 to 2023 are listed below. So Netflix was a 1.27, Apple was 1.38, Tesla was 1.51, so it was pretty volatile during those times. Nike was about a 1.1. So, and SPY, of course, is 1, which is the standard compared to other stocks. So you can tell that a Nike, if you look at the chart, it really doesn't move that dramatically. And then Tesla and Apple, back in 2022 and 2023, they were ramping it up. They were moving. Now, talking about how to use beta. So beta, you use it you basically use beta to kind of tell where you're going to be investing in different stocks. So for instance, if I invest $100 in the S&P 500 and I make $100, if I invested in a company with a beta of 1.5, then I could have potentially made $150. So it just kind of tells me that this stock moves a little bit more than the S&P 500. I might want to invest there. But then at the same time, beta could move the other way. So it could cause like drastic movement of 1.5 could mean that it moves negatively as well. So beta can mislead you about the direction of the price of a stock. Even though a company may have a greater beta than 1, it doesn't tell you the direction that the stocks are going. So beta could be high while stocks are going down in price, and your investment would be losing faster than the S&P 500 if it is a down year. So that's something to keep in mind. Beta is not usually something that a lot of people look at specifically when trading, but it is something to keep in mind when you want to create your own basket of stocks. And then for your portfolio. And then here are just the different average returns for different products that you may know about. So the next thing that I wanted to talk about in terms of volatility is an ADR and an ATR. So an ADR is the average daily range of a stock. So it is pretty much an indicator that you can look up on your trading platform. And it's just ADR and it's average daily range. And what that does is it calculates the average daily movement of a stock. Now, there's also something called the ATR, which is the average true range. Also another tool to measure the daily movement of a stock up or down. Now, I use a average true range because to me it's more accurate and it also gives a lot more data points when looking at the up and down movement of a stock. And it's really calibrated to where the stock moved in the past X amount of days, and then where the stock closed the previous days, and how much it is expected to move up or down from the previous closing position. So let me demonstrate one. So the one that I use one called the Saudi ATR. This is a really good indicator, and what it does is it calculates the average move of a stock up and down in a given period of time. So I'm going to calculate it to the month. So for Tesla, let me move this indicator out of the way. For Tesla, it's showing you the average move that Tesla should be making on a monthly basis. So this information can be very crucial in terms of getting in and getting out of trades or investments. So let me take off the info label, minimize this guy here. All right, so you can see these lines that just appeared on the chart. So I'm going to put them away, bring them back. So these are ATRs, average true ranges. So as you can see, there's a blue line and there's a yellow line and there's a white line. So for this ATR, this specific ATR, average true range, it shows the blue line is basically anything, whenever price starts moving above this blue line, then you can expect that there's a lot of buying pressure. When price starts to move below this and trade below this, there's a lot of selling pressure, so you'd be better off selling. This middle line is the price at which price closed at last month. So as you can see here, this is the daily time frame for Tesla, and price closed at 183.37 last month, and that's where this line is. So from 183.37, the expected move to the upside is about to 196, so about 13, and then down to from 183 down to about 170. So $13 either way is the average move of Tesla on a month-to-month basis. So it gives you really good information about the average range that a stock should move. Really good tool to use, ADRs and ATRs. So check those out to see how volatile a stock can be. So 13 is actually a pretty big number. Some stocks only may move about $4 to $5 in either direction per month. So I like to trade more volatile stocks because I trade derivatives, which are I trade options. So options allow you leverage, which basically means a small amount in for a large amount out. So if you have any questions about ADRs, ATRs, volatility, let me know in the comments, and I'll be glad to make another video. Thanks for tuning in to the Fit to Flourish podcast, and I'm out.